All right. Good morning, Lagos. Good morning, everyone. This is Follow the Money, brought to you by Nairametrics. My name is Ugo Dre, and we do this every Monday, 8 to 8:30 on this channel. What a week it was last week for markets and, of course, for the Nigerian economy. But even more personally for me, yeah, I turned a year older last week, and thank you all for all the well wishes that I got. Always a pleasure getting well wishes and comments and messages from people you don't even expect to hear from. All right. Very busy week it was, like I mentioned. But of course, before we start the show, I like to always say that this program reflects my view, not that of Nairametrics or anyone. It is purely for educational purposes, and it is not an investment advice. Investors should do their own research and consult your financial advisor before you take any investing decision. All right, now that we've got that out of the way, we'll go right into the show. Last week was a lot of macros. Yeah, we got a lot of macros last week. Inflation numbers, particularly, was the major macro that came out last week. And according to the NBS, Nigeria's headline inflation printed at 24.48% year on year for the month of January 2025. This, of course, follows the rebasing of the consumer price index. And based on NBS data, rebasing was the base year that was chosen for the current inflation number was 2024. Of course, that has huge implications for the inflation numbers, and no surprises that it came down at 24.45%. For those that want 24.48%, I beg your pardon. For those that are wondering why or how that happened, of course, when you rebase and you choose a very high year, or you choose a year where prices were mostly elevated, then inflation could easily just trend downwards, just purely statistical. And that is what, looks like has happened. Remember that inflation is usually dy dx. That is the current year divided by the previous year minus one. That essentially is just a percentage change. And so if your denominator is usually very high and your numerator is not so high, or just slightly higher than your denominator, then you would have, higher. Of course, you would have inflation, because inflation is usually price increases, but the rate of increase would not be as much as expected. A lot of pundits have suggested maybe they probably should have used a different base year, but MBS decided to choose 2024. We're expecting GDP numbers this week, and base year for GDP was actually 2019. So guys are wondering, why did he choose 2019 for GDP base year and not 2024? And didn't you choose 2019 for inflation base year? But you know what? That's what the MBS has said. I beg your pardon. So now, it's going to be very difficult to plot any kind of trend analysis with this number, because December inflation number was 34.8%. So I'm just wondering, 10 years, 20 years from now, anybody who's looking at this data is going to be wondering, what happened in 2025 January? How did we go from 34.8% in December to 24.48% in January? 34.8, 24.4. Wow, I'm always going to be wondering. But of course, it's an internet age, so there's a lot of analysis out there. There's a lot of explanation for why this happened, which of course is the rebasing. Now, aside rebasing, the MBS also, aside the headline inflation, the MBS also said urban inflation stood at 26.09%, while rural inflation was at 22.15%. So in a nutshell, inflation numbers are down. Everything is basically changed. So for example, food used to be the major used to carry the major weights when it comes to inflation and the inflation basket. Food alone was about 50+% in terms of what constitutes our inflation basket. But now food has dropped to about 40+% or so. So of course, this is because of the rebasing. And so just after the rebasing, exercise. Of course, we expected the central bank's monetary policy committee to also meet and discuss, you know, whether they were or decide whether they were going to increase the benchmark interest rate, which they call the monetary policy rate, or reduce it, or probably just keep it stable. And they had to push that meeting for a day because the MBS was releasing its inflation numbers, and so that's why they pushed it for a day. And eventually, we did have that a meeting hold. And no pun intended, the MPC decided to also hold the monetary policy rate at 27.75%. And so, and one of the reasons, of course, was that they wanted time to see whether this rebasing or whether inflation was actually decelerating, or whether, this 24.48% inflation numbers that we currently had is reflective of the economy or some kind of deceleration in general. And so they decided to hold rates at 27.5%. Also decided to retain the asymmetric corridor at plus 500% / minus 100%. So what that essentially means is that when you see the asymmetric corridor, it means that whenever banks want to borrow from the central banks, they would pay 27.5% plus 500, right? That's 2.5%. But whenever the banks wanted to lend money to the CBN, that is essentially deposit money with the CBN, money that they probably don't need, the CBN would collect it from them at 26.5%. That's 27.5% minus 100. And so that's the asymmetric corridor. So anytime you hear asymmetric corridor plus 500 / minus 100, that's essentially what it means. And of course, they also retain the cash reserve ratio at 50% for deposit money banks and 16% for merchant banks, while also keeping the liquidity ratio at 30%. So what this means in general is we're likely going to continue to have higher interest rates, at least until May, when the Central Bank Monetary Policy Committee meets again to vote. So essentially, we have 6 months of the same MPR, because MPR, the current MPR of 27.5 has been there since November. So you have November, December, January, February, March, April, May. So more than 6 months actually of having or experiencing this elevated interest rate for now. Now, what's also very interesting is that while MPR is at 27.5%, we've seen interest rate for short-term securities trend downwards to about 19%, or effective yield 21, 22%, depends on which one you're buying. And of course, these are like treasury bills and OMO bills. And so some of the OMO bills that we've seen pop up over the last few weeks have trended lower. Remember when on this show I was saying that treasury bills were high at 29%, and that if you missed out on buying treasury bills towards the end of last year, then you essentially miss out on some very good investment opportunities, right? So now that, we're seeing treasury bills at 19%, maybe this is just about the last chance you have before you start to see treasury bills go back down. But of course, no explanations why. I mean, it's easy to understand why you're seeing treasury bills go down. It's very expensive for the government to continue to maintain that level of interest rates month in, month out. Like, it's just very expensive. And so no surprises that we're seeing it go down, even though MPR is currently at 27.5%. So a bit of some kind of convolution there. CPN MPR is at 27.5%, and then risk-free interest rate at maybe 19-20%. So a little bit confusing. You might want to say, or like one of my co-host said last time on our show, Drinks and Mics, bifurcation. So what does this mean in general? I mean, with the CBN essentially voting to keep rates at hold, I guess the message that they're passing strongly is that, look, we gotta wait and see how the economy actually reacts over the next few months. It's just too early to know whether we're seeing prices decelerate. I mean, to be fair though, some of the surveys that I've seen, including the ones that Nairametrics conducted in Lagos, we have seen food prices pretty much drop. Not all food prices, but some major food prices have basically dropped in January compared to December. And like some people will say, well, that's expected because December is usually pretty high when it comes to food prices or when it comes to inflation. So generally, you tend to always see price drops. So it'll be interesting to see if that remains in February, going into March and even into April, where we have the Easter celebration. So enough time for the CBN to at least plot some kind of series or have some kind of pattern, and that would decide whether they continue to hold rates or reduce it, or who knows, maybe even increase rates. Now, this also all have effects on Nigeria's exchange rate. And as we've seen over the last few weeks, the Naira has strengthened against the dollar. By the way, the dollar has been weaker, not just for against the Naira, but against most emerging currencies globally. Albeit it could just be temporary, but we've seen a much weaker dollar for some time now, while the Naira has essentially rallied. At some point last week, the official rate dropped below 1,500. And for the first time, in a while, in fact, we've seen it drop below 1,500 twice or thrice this February alone. And so this week is going to be very important for the exchange rate because this time last year, we also saw a bit of a stronger Naira, and then well into March, we now started having all that volatility happen just as February was easing into March. And so it's interesting to see also what the markets or what traders essentially do this week, especially as they digest the central bank's decision to hold MPR at 27.5%. Some of the feedback we get from traders anyway is that, look, banks are awash with dollars. And so this appears to be a bit more supply than demand. And maybe that is why you're seeing exchange rates strengthen, at least the Naira strengthen. Some will also say, well, they've not shared FAC money yet. Let's wait till they share FAC money and see what that means. That means you're wondering what I'm talking about. I think there's some chatter out there that anytime the government shares FAC, federal allocation, to state governments, we tend to see exchange rate depreciation happen. So this is a very testy week for the Naira, and we'll see how that pans out. All right. So when I'm back, we're gonna ease into the second half of the show, and when we get into the second half of the show, we will face the markets and figure out what happened on the capital markets, particularly in the stock market last week. Be right back. You can watch a recorded version of the show on our YouTube channel, Nairametrics TV. We also have a host of other programs that you can watch there. Pretty exciting financial related stuff for you, where we'll break down different things in the economy. We've got content for everyone. I mean, no matter, even if you're a novice, we have one called The Novice, where we basically break down financial literacy. And, we tend to ask some of those questions that you always want to ask to people that speak a lot of financial stuff, and they break it down for you. And of course, latest episode of our Drinks and Mics show, which features me and some co-hosts, is currently live as well. You can always watch it on our YouTube channel. Just go there, Nairametrics TV, and you would see all the content that we have for you. All right. Welcome back to the second half of the show. So we go right into the market. So the Nigerian All Share Index ended the third week of February in positive territory, rising by 4.5 points to close at 1,497 points, essentially gaining 0.41% compared to the week before. And so the NGX All Share Index is still above the 108,000 mark. All Share Index declined in trading volume, however, dropping by 20% to about 2 billion shares. We've been seeing some kind of drop in trading volumes for some time now, suggesting maybe investors are essentially recalibrating. I remember what I talked about, CBN holding interest rates at 27%. And then you're also seeing interest rates also fall, particularly fixed income interest rate for OMO and Treasury bills. That could maybe, in a way, potentially benefit the stock market. I don't know, but I mean, for now, it looks like investors maybe might not be seeing it that way. And we're seeing that the All Share Index experienced a decline in trading volume by 20.63%, while market capitalization anyway, despite that, still gained, rising from 67.4 trillion to 67.2 0.6 trillion last week. Now we did see 28 equities appreciate in prices, which is also a little bit a decline from 65 equities in the previous week, while 58 equities depreciated, an increase of about 31 in the previous week. So we did see less stocks appreciate this week compared to the week before. And then the NGX Premium index also declined by 1.15%, while the NGX Consumer Goods Index surged 6.5%, driven essentially by gain in Dangote Sugar, Boa Foods, and Champion Industries. The NGX Insurance Index also gained 1.74% during the week, while the NGX Banking Index gained 3.22%, and the NGX Oil and Gas Index gained 2.87% last week. So mixed bag of gains and losses for some of the indexes on the exchange. And of course, we go right into the hottest stocks, top gainers and top losers during the week. The worst stock last week in terms of losses was Union Dicon Salt. That fell 25% during the week, followed by Ikeja Hotels, which fell 21%. Are these stocks in your portfolio in any way? Anyway, UPDC fell 17.99% to 3 naira 10 kobo per share. There's going to be an article on UPDC on Nairametrics today, I think, where we essentially analyze whether this is a buy, sell, or a hold. Stock is currently trading at about 40 times or so its earnings. Academy Press also down 16.5% to 2 naira 78 kobo, while Owando is also down 15.7% to 59 naira. Royal Exchange down 15.5%. Ella Lakes down 14%. Etana PLC down 9.78%, and VFD Group down 9.6%, while UPDC Real Estate Trust, that's right, down 8.7% to 6 naira 75 kobo during the week. So this is essentially the top 10 losers. Were any of the stocks in your portfolio last week? Any of them at all? Anyway, let's switch to the gainers and let's see which one of them may have crept into your portfolio last week or may have helped your portfolio grow last week. NASCON. Do you have NASCON shares? If you have NASCON shares, you might want to check it out because it rose 6.3% to 44 naira 50 kobo last week. Red Star Express also rose 6.67% to 6 naira 40 kobo last week. Coronation Insurance, is that one insurance stock you have in your portfolio? You want to check it out because it gained 9.3% last week to 2 naira 68 kobo, while Nigerian Enamel Wear gained 9.4% to 20 naira 2 kobo. Champion Breweries, that stock always reminds me a lot of things, mostly bad memories. That stock anyway gained 9.87% to close at 4 naira 12 kobo. Sovereign Trust Insurance up 11% to 1 naira 3 kobo. Boa Foods joined my portfolio, I think, early in the year, gained 11.9% to 418 naira per share. And of course, Dangote Sugar Refinery gained 15%, and one of the major drivers of the Consumer Goods Index last week to close at 41 naira 40 kobo. Is this Dangote Sugar in your portfolio? If it is, then you may have recorded incredible gains. Now, the top two stocks are what you call penny stocks. Smart Products Nigeria up 15.3%, and Abbey Mortgage Bank up 16% during the week. So those make up the top 10 gainers last week. I had about how many shares here in my portfolio that gained? Boa Foods currently in my portfolio, only stock in my portfolio in this top 10 list that did post a gain, and none of the stocks here are actually in my watch list. So, no surprises. I mean, the gains were in that super like you tend to expect. So these are really, really, really tepid gains that we got most of last week. I didn't have any stock here there was no stock in my portfolio that was on a loser's count during the week. All right, so we go right into other things that happened during the week. PZ Cussons was in the news last week. But before I get to PZ Cussons, let me just go back to the stock market. So now that we have seen the CBN come up with their MPC numbers, MPR, deciding to keep MPR at 27.5%. We've seen interest rate go down. I mean, perhaps maybe we might be seeing some kind of interest in the stock market. Why am I saying this? I mean, at the end of the day, people are always going to look for yield. Money would always go to where it can find higher returns. And so if it looks like returns in the fixed income side is beginning to trend lower, then that could just be a boost for the stock market. Well, I mean, theoretically, and that's something that we're going to look out for this week. And of course, this is the earnings bliss where you're seeing a lot of companies release results. Some mega heavyweights haven't released some of their numbers yet, so we do expect some to come out this week. And then that will determine how strongly February will close. This year, whether February is going to close positively or whether it's going to decline. So this week is a major test, not just for the exchange rate, even for equities market as well, because investors are going to be, pouring through what we've seen in the MPC and whether that augurs well for the equities market. And of course, you also have FPIs who have really, really yet to return to the Nigerian stock market. And FPI are very, very important to how well the stock market performs. And interestingly, we are seeing U.S. stocks decline most of last week as they continue to, as concerns mount over some of Donald Trump's policies, especially that has to do with imposing tariffs and trade wars, while European stocks seem to be surging despite some of the political waves that we're seeing in Europe. And that's basically what we've been seeing, locally and globally as well. But importantly, it'll be nice to see whether we do find some kind of positivity or some kind of drivers or something that could maybe improve the stock market this week. So paying attention to the stock market. Of course, later on the other version, extended version of this show, which you can always get on Nairametrics TV, Follow the Money Hot Stocks. I'm also going to be reeling out some of the hottest stocks this week that we've been tracking at Nairametrics. Now we'll move on back to PZ Cussons. So PZ Cussons announced that its board of directors had decided to convert 32.26 million of its outstanding loans into equity. Interesting. Yeah, so if you all recall, PZ Cussons, just like most companies that had foreign subsidiaries or that had foreign ownership, all borrowed essentially, in dollars when dollars was scarce between 2021, 2022, and 2023, so that they can do their business, they can continue to import. But when exchange rate moved, most of them did face serious challenges with FX losses, and some of those loans remain on the balance sheet of those companies. And I mean, they got to be able to pay those loans back. So if you can't pay that loan back in dollars, then what you can probably do is convert it into some kind of equity or leave it in your books as a loan in perpetuity. And of course, that is not usually the option that most of this company wants. So the backstory is that in June 2022, PZ Cussons loaned $40 million. PZ Cussons, that's the parent company, loaned $40 million to PZ Cussons Nigeria to help them cover their raw materials and operation cost. And of course, this was because, like I mentioned, currency was difficult to manage. But between 2023 and 2024, what happened? Exchange rate depreciation, and that got them into some kind of trouble. So according to the company's company secretary, it says, after extensive discussions, we have agreed that converting a portion of the outstanding loan amount to $34.6 million. And so we're converting that into equity. Converting it into equity is the most effective strategy to reduce debt and strengthen the company's balance sheet while significantly minimizing the risk of future exchange losses. And so that is what they've decided to do. It'll be interesting to see what this means for the existing shareholders of this company. I mean, PZ Cussons has a market capitalization of 105 billion naira. So converting $34 million into equity. I mean, just do a simple math here. $34 million. If you just use 1.5, that comes to about 52 or so billion naira, which is about half or so, almost half the current market capitalization of PZ Cussons. So you're likely going to see some kind of dilution of shareholders in that company because of this. A little bit of background as well as why this is happening. After the exchange rate, depreciation, PZ Cussons lost 157.9 billion in of course exchange losses, which wiped out the entire equity, and then they had a negative shareholders equity of 27.5 billion as at March 2024. But they have been growing in revenues. Revenues up 34% and 42% year on year. That's it. Revenue has been increasing between May and November last year. So we've seen growth there. But you still do need to sort out that equity position or that loans that they have. And that's why I said that loan of about 51.7 billion is going to be converted into equity. And I hear that it's going to be at the price of 23.6 naira per share, effective February 12, 2025. So they will create 2.1 billion new shares just to compensate PZ Cussons. So PZ shares, of course, closed at 27 naira per share during the week, much higher than the 23.6 naira price that they are converting for, which means that they're probably going to be getting a lot more shares if they are using a much lower price. So that's been PZ, by the way. So we'll quickly move on to analyst prediction. We are hearing that there's likely going to be an increase. And analysts at Cardinal Stone are predicting that consumer goods stocks would experience appreciation this month and I guess well into March. So that is something that I saw that sounds very interesting to me. I'm probably going to look at that more closely on Follow the Money Hot Stocks, which you will catch on our YouTube channel tomorrow. All right, so that has been Follow the Money, brought to you by Nairametrics. Today's show was mostly dominated by macros and what it means for the equities market. Now that inflation numbers is like 24.4%. Of course, you can catch this episode in case you missed any part of it on our YouTube channel and other interesting financial content programs we'll have on Nairametrics TV. If you're not following it yet, of course, go to your YouTube channel. Just look for Nairametrics TV, subscribe, and of course, always get some of our videos and turn on your notifications so that you can get our videos whenever they pop up. This has been Follow the Money, brought to you by Nairametrics. And until we do this again, do have a profitable week ahead. Goodbye.